I'm being joined first by the Managing Director and Chief Executive Officer of Dignity Finance and Investment Limited, Dr. Chijioke Ekechukwu. He's also a Vice President at the Abuja Chamber of Commerce and Industry. Thank you so much, Dr. Chijioke, for your time on the show. I'm also being joined by Mr. Ibrahim Wahab, who is an investment analyst at Chapel Hill Denham. Good afternoon, gentlemen. Thank you for your time.
Good afternoon, Tolu.
Hi, Tolu. Good afternoon.
Yes, Dr. Chijioke, I'm going to start with you. Now, we've seen 3 meetings by the MPC, and we've seen an increase in all of these meetings, taking us to about 400 basis points. And as of today, we stand at 15.5%, talking about our monetary policy rate of the Central Bank of Nigeria. But this is not reining in on inflation. What is your reaction to this move by the Apex Bank?
The increases we have seen and we have witnessed were occasioned by the global economic situation, which we found ourselves, where every country of the world started experiencing high rate of inflation. And in fact, many countries, especially developed ones, have never seen this kind of inflation in the last 20 years or more. And so we are also experiencing this height of inflation even for such a long time. And so these things have been occasioned by all the various factors that we all know today, the war happening in Ukraine, which has made the cost of everything to rise and that. And of course, in order to adjust to this kind of inflation, it was necessary for our own regulatory bodies, and of course the MPC, to adjust all the rates, especially the MPR and the CRR. And, so these were all the things that have affected this. And even before now, we expected that these increases would have been more than this, but CBN, in their own wisdom, tried to caution themselves to ensure that we don't increase so much of the MPR and above that will also cause another ripple effect that will worsen the economy. So these are all the things that have caused it, and we are witnessing it today. Like I said, it's a global situation all over the world right now.
Well, let me ask Mr. Wahab the same question. Mr. Wahab, what do you think, or how does it come to you, considering the global and, of course, domestic issues that we face as a country, and inflation still standing at 21.09%? Some analysts like you believe that the CBN will have no choice than to increase rates again. What do you make of that?
All right, thank you very much, Tolu. So, you rightly mentioned over the last 3 meetings, they've raised rates. The last policy meeting, they actually did up to 150 basis points. And I think at this point, the CBN could argue that some of the policies that they put in place are actually working. Mm-hmm. And I'll give you an instance, right? If you check the inflation numbers on a month-on-month basis, what you see is that since July 2022, month-on-month inflation has actually been coming down gradually, right? The only reason why year-on-year inflation is at 21%, the fastest pace of price growth in about 17 years, is basically because of the negative impact of the low base from last year. Right. So somehow, one can argue clearly that, look, all the policies rates that they've taken, we've started to see the impact on the inflation data. So what that means is that between now and the next 3 to 4 months, once that negative impact of the low base from last year thins out, we'll probably start to see, some sort of significant moderation in inflation towards Q1 of 2023. Again, it's also imperative, like Doctor said, for the CBN to raise rates, given the fact that, US, UK, EU, they are all currently, going aggressive as far as, hawkish rendition is concerned. And so for the CBN to reduce external shocks or external pressure, stemming from investment flow, getting out of the country towards where it's are a lot more attractive in the developed market, then what that means is that CBN would have to also raise rates in the domestic market to sort of ensure that their investors are getting, return that is more or less, in tandem with the risk that they are taking. So, the argument is that we can view it from those two perspectives and say that, yes, some of the policies in implementation has actually been working.
Nice one there, Mr. Wahab. Dr. Ekechukwu, food inflation is biting hard. We see the figures, coupled with flooding that we've seen in some states of the Federation. This is indeed worrisome and would tell on some of the efforts of the Apex Bank. One is the Anchors Borrower Scheme, which a lot of money has been invested in. Now, as we move to we're supposed to be in the harvest season and all of this is happening, what effects would that have on price of food and continuously also on inflation?
Well, if we have to say the truth about the expectation and the expectation of the food space of Nigeria, we should expect that with all that you have mentioned, the flood, the insecurity in the farmlands, the logistics issues and shortages actually from supply chain coming from grains and all the grains coming from the warring countries, we are also expected to have an increase in the food inflation. Right now, it looks like it's still manageable, but of course, when we add the seasonal impact on the pricing right now, where there's going to be a lot of demand pool, then we expect that the price of food, the cost and price of food will just increase. Already, even without the season we have entered into, we would have had this food inflation rising above every other inflation. But to happen around the same time when the demand for all the items of food is happening. And then, of course, before this happened, we saw a lot of flood. We're already anticipating that rice may not even go up to half of the demand. The supply will not go up to half of the demand because of the kind of flood that happened before now. So having said all this, it will not be surprising if by the end of this month, we see a higher food inflation happening, and noting that the causes of all these other impacts on the food inflation have not been improved. We have not improved the supply distortions from Europe. We have not improved on insecurity that has happened in the last few years. We have not improved on, of course, the flooding. The impact of the flooding is already and destroyed the farmland. And so if we look at this, of course, we also know the impact of exchange rates on part of our food, because these are all inputs into what we consider today as our final products. So all these things are all that are contributing to the kind of food inflation we're experiencing today. And none of these things has improved. So because they have not improved, we don't expect that there's going to be an improvement in the inflation we expect in the food space. So that's the expectation, the fact that the prices of food will increase and the inflation will just also increase, at least at the end of November.
Great stuff there, Doc. As we prepare for the Christmas season, there's going to be a lot of buying this season, but I'll come back to that. Mr. Wahab, Doc mentioned something very important, talking about our FX crisis. We've seen what the central bank wants to do in recent times, redesign the Naira. And immediately that happened, we saw what happened in the parallel market, the greenback getting some bashing there from the Naira, a little bit of appreciation, which we saw at that time. But let me ask you, that level of appreciation, how sustainable is it? As at today, the dollar against the greenback in the other market is about 770 Naira, in some cases 780 Naira. What's your reaction to this?
Oh, look, Tolu, it's not sustainable. That's the short answer. Because, I mean, at the end of the day, it's all about the case of demand and supply. So there are two key factors driving Naira depreciation as we speak. And if, the CBN does not introduce some sort of FX policy framework that will redesign the entire structure, then we probably would continue to see this sort of depreciation going on. Number one is that there's still a lot of backlog in FX demand that the CBN is yet to clear. The last time we checked this number, up to $6 billion as far as backlog is concerned, I mean, if you speak to any manufacturer, I always speak to cement producers. I was in the same, meeting room with Lafarge recently. Danksem, all of these guys, they are all usually struggling to get, FX in order to, complete, their production process, right? Beyond, cement, go to the aviation sector, think about the manufacturing sector. So what we're saying is that up to $6 billion is yet to be cleared as far as backlog is concerned from the CBN. Now, beyond the demand side of things, there's also the speculation side of things. As we speak right now, to look, a lot of people are losing confidence in the Naira, right? Even people who don't need FX for anything, they just want to hold FX just so they're able to protect their assets, right? And this is probably going to continue. I mean, day in, day out, month in, month out, the CBN is not, coming out. I think one of the major objectives of the CBN is to give confidence to the market. So the CBN, I'm really sorry today, hasn't really done a lot of that, right? Until we see fundamental change or fundamental shift as far as FX supply is concerned, they will probably continue to see this devaluation or depreciation continue. Production challenges is still there. I think crude oil production based on OPEC data as of Q2 2022 is actually down by up to 5%, right? Crude oil price also is now starting to moderate significantly. So the impact of this is more or less driving some sort of significant reduction as far as FX inflows is concerned. And if the CBN is not able to supply the market, then there's no point thinking about the fact that whether or not the Naira would appreciate. We'll probably continue to see this sort of framework continue.